Let's rewind the clock and picture a scenario that would make even the most seasoned Wall Street veteran break into a cold sweat. Imagine taking the keys to your entire life savings, bypassing the financial advisors, ignoring the complex analytical charts, and handing total control over to an artificial intelligence for exactly 1 year. Sounds like a fast track to absolute bankruptcy, right? Well, the final results of this 1 year experiment are officially in, and they are guaranteed to completely shatter everything you thought you knew about modern wealth building. To find out if an algorithm could actually beat the unforgiving machinery of Wall Street, the challenge was incredibly simple. Ask AI to propose exactly 10 stocks designed to outperform the S&P 500 over the next 12 months. While Google Gemini and Claude immediately backed down, refusing to cross the strict line into direct financial advice, 4 fearless digital contenders stepped into the ring. ChatGPT, Microsoft Copilot, Perplexity, and a relentless dark horse initially named Finch, which later evolved into Fiscal AI. The ultimate benchmark for success was the Vanguard EASE and P500 ETF, setting a very solid, historically reliable baseline with a 14.5% return. From day one, the results varied wildly, proving that not all code is created equal. Microsoft Copilot became the perfect cautionary tale, demonstrating that AI can easily fall into devastating value traps. It managed a severely disappointing 7% return, bleeding heavily on risky bets like Clover Health, and suffering a catastrophic 68.9% crash on the trade desk. On the other hand, ChatGPT took a much more conservative, almost human approach. It delivered a highly respectable 18% return, comfortably beating the broader market by leaning heavily into big tech giants like Nvidia, Microsoft, and Meta. It played the herd mentality perfectly, easily absorbing its own identical losses on the trade desk simply because its blue-chip tech portfolio carried the dead weight. But things got genuinely fascinating when we analyzed Perplexity, which returned a staggering 27.9%. Instead of just throwing out random hyped-up tickers, Perplexity acted like a master financial strategist, dividing its picks into targeted growth and dividend categories. This brilliant diversification allowed massive, calculated gains from companies like Shopify, New Holdings, and a jaw-dropping 59% surge from TSMC to completely carry the portfolio to new heights. Yet, absolutely nothing could prepare us for the undisputed champion of this experiment, Fiscal AI. This obscure bot completely blew the doors off Wall Street, delivering an unbelievable 36.5% return, more than double the S&P 500. Even with a massive chunk of its cash sitting totally dormant for half the year after its pick. Hess Corporation was acquired by Chevron for $53 billion. Fiscal AI's semiconductor plays were legendary. It capped off its flawless victory with Lam Research Corporation, a stock that skyrocketed by a mind-bending 114%, effortlessly doubling the initial investment. The underlying data here is terrifyingly clear, painting a picture that traditional analysts simply do not want to see. 3 out of 4 chatbots casually outperformed the broader market, delivering astronomical returns that human hedge fund managers spend their entire highly stressful careers chasing. But while this is an incredibly thrilling experiment that redefines the boundaries of wealth generation, blindly trusting a chatbot with your financial future is still a highly dangerous game. Algorithms thrive in a vacuum of historical data, but they currently lack the human intuition, the emotional intelligence, and the pure survival instinct needed to truly navigate fundamental business valuations during a severe, unpredictable economic downturn. Code might have won this round effortlessly, running laps around the suits on Wall Street, but the market is a ruthless, endless game. The real chilling question we must ask ourselves isn't whether an AI can beat the market for a single bullish year. The true question is, what happens to the global economy when the machines are the only ones left playing, and humanity is merely watching from the sidelines? Welcome to the terrifying, limitless future of finance.